I'm Tom, and this is an answer to the question of how Robinhood makes money. So it's a legitimate question, given that Robinhood allows you to trade stocks without a commission. People wonder, okay, how are they actually making money if they're not charging me to trade stocks? So you can look at their page here where they talk about their disclosure here, where they talk about how they make money, how Robinhood Financial and Robinhood Crypto make money, and it lists the different ways that they do. So the first one is rebates from market makers and trading venues. Let's come back to that one because it's really significant and it's a little bit harder to wrap your head around. But let's look at the other ones first. Robinhood Gold, this is their kind of bonus extra level of service. You get more research reports, you get bigger instant deposits. It's a $5 monthly fee. And you get some better margin options as well. So they're making some money from that, $5 monthly fee, and people basically paying into that. So that's part of their revenue, subscriptions. Stock loans, this is their term for margin. So you're basically borrowing money from Robinhood to buy stocks, and it allows you to leverage the amount of stock you can buy or other securities you can buy. Increases your risk, increases your potential return. They charge an interest rate on the money that you borrow, and that's a source of revenue for them. And a stock loan is actually a nice way to say it, I think. It's a pretty good description of what's happening. Income from cash. So if you deposit cash into your Robinhood app and it's sitting there and you're waiting to invest it, Robinhood can take all of the cash that people have put into the app, pull it together, put it into basically like almost like a savings account while you're waiting for you to actually invest it, and that's going to generate some revenue and interest for them. So that's sort of a standard thing. Banks and a lot of others would do that. Cash management. This is the no longer open to new users, but this is I think where you're able to use a debit card, and they're getting paid a bit for that. And again, for managing cash within the app. And then this is there's sort of these smaller revenue streams, proxy service revenue, fees, for example. So if you want to get like a printed copy of your statement, they might charge you a fee. There's some other fees that they might charge, but generally they're fairly low on the fees compared to other brokerages. You can see if I want a paper statement, they're going to charge me $5. If I want it shipped overnight, it's going to be $50. So a little bit of revenue. But the vast majority of the revenue reportedly comes from this first one, rebates from market makers and trading venues. And the idea here is basically that when you when you place a trade on Robinhood's app, it's not that Robinhood actually buys that security for you necessarily. They hand that order over in many cases, not always, but in many cases, to a market maker, a separate company that handles the actual buying and selling of securities. And that market maker will often actually buy or sell the stock that you've requested for a fraction more or less than the order price that you necessarily put in. It's the bid-ask spread. And for certain kinds of securities, it can be quite significant. For stocks, it's usually very small, but in the aggregate, with all of these orders being sent to these market makers, it adds up, and they can collect, fractions of a cent. And it's legal for them to do this as long as they're providing the best possible execution of the trade. That doesn't necessarily mean that the trade executes the best price. It just means it's executed, the best possible. So maybe fastest, maybe. That it's might be the best price. There's other kinds of factors there. What it means though is that these market makers that Robinhood sends these orders to are actually buying or selling the security for a fraction less or more than the person placing the order, and they can collect a bit of revenue there. They also get useful information on this order flow, and they will pay Robinhood for directing the orders to them. And they have this smart order router that's going to send some of the trades to an exchange directly to make the purchase, some of them to these market movers. They get payments from some of these to incentivize market makers, incentivize them to send that deal flow to the market maker. You do potentially, not get exactly the price of execution that you put in when you went to purchase the security. It's probably not going to make a huge difference for most investors, but that's how they're able to offer that zero commission trade there. The vast majority of the revenue comes from the system. And it's not just Robinhood. This is something that a lot of discount brokerages do. Ultimately, as long as they're following the rules and the laws, it doesn't necessarily harm markets. It might be good for markets, actually. Then doesn't necessarily harm individual investors, but it's certainly a big revenue generator for them and probably a good revenue generator for their partner market makers there as well. And it's just something to be aware of, if you're using them versus a full service brokerage that's going to probably execute things more on exchange directly. Again, probably doesn't make a big difference for you, but that's the big source of revenue for them. They've sometimes run afoul of the law. They've gotten several fines for not doing this properly, but overall, for me anyway, it doesn't make a huge difference. And I like that $0 trade that ends up being possible here. Same deal with cryptocurrencies. This is a little paragraph at the end that they have relationships with different trading venues, and they can get some rebates from some of those that contribute to their revenue as well. So a lot of different sources, but the vast majority is going to come from that, basically selling order flow to these market makers, plus subscriptions, margin, other things that you'd find in a typical brokerage. And that's how they offer that commission-free trading system. This is not investment advice in this video. This is just based on my own research, so always consult a professional advisor before you make your own investments. But useful information, interesting information if you're wondering how is Robinhood free. If you found this helpful in any way, please subscribe to my channel. I've got a lot more Robinhood and other investing and personal finance content.